making investments for the rest of your life, right? You're making generational investments for your careers. And so try not to think of this as a short-term problem, but try to think of this as a long-term opportunity. And everything you do should be geared around that kind of long-term opportunity. Of course, you need to have short-term resilience, which is what we spoke about earlier, which is if you're a business, it means you need to have enough liquidity to make your payroll for the next quarter. But it's that when you're thinking about strategy, when you're thinking about how it is you make investments, both in terms of financial sense, but in terms of your own careers, think about it from a long-term generational perspective. What are the investments that I can make in myself and in others that will have the slowest depreciation, right? Those are the sorts of things you want to do. Relationships are really, really important at this stage in your life. The relationships you build, if you're 20 years old, the relationships you build in the next 10 years, these are going to be the relationships that will make or break your career over the course of the next 30, 40 years. Because it is that investment in trust. If people trust you, they will do all kinds of things for you.
So while Professor is just coming on, I'll just quickly introduce the topic today and introduce him as well in his absence. Slightly funny, but nonetheless. So as you know, Dr. Ramanna is the director of the Master of Public Policy program at the University of Oxford Blavatnik School of Government, and teaches business public policy at the university. Formerly, he was a professor at the Harvard Business School, where he helped build a curriculum to develop leaders who can confront the 21st century's most challenging problems, then, of course, teaching the MBA course. Professor Ramanna's scholarship primarily explores the role of business leaders in shaping the basic rules that govern capital market societies. Professor Ramanna received a PhD in management from the Massachusetts Institute of Technology. Professor, can you hear me now?
I can hear you very well, yes.
Awesome. So I just went ahead and introduced you in your absence. I'm sorry. But we have a pretty strong audience and everyone's pretty excited. So just to introduce the topic for today, of course, nobody needs to know what's happening in the world today. Everyone knows really well and everyone's living it. But we had a webinar a couple of days ago with Professor Chaudhary from Wharton, and he said something very interesting. He said, that we cannot let this crisis go to waste. We have paid a huge amount, and we have, paid with our life and with our money. We have to make sure that something good emerges out of this crisis. And that's really what I leave you with, Professor Ramanna. We'd love to hear your thoughts on, how can we really create opportunities from this crisis, and what should the students in the age group of 20 to 30 really be thinking about during a time like this? So over to you, Professor.
Great. Well, thank you so much, Pratham, for that introduction, and thank you for the audience for tuning in to this session. I caveat it with what Pratham's already said, which is that this is a fast-moving and fairly dynamic situation. So obviously, we're all learning as we are moving along. That said, this isn't the first time the world has experienced a structural crisis like this. So there are lots of lessons in history we can look back on in this moment as we think about the way forward. So I guess the first thing to say is that even if we do see a reasonably quick V-shaped recovery, COVID-19 is very likely to be an enduring event in our lifetimes. Because the disruption it has already caused, but also for the changes that it has ushered into the way we live. So the point for businesses and for individuals, for that matter, is not to pretend like nothing has happened, but rather to embrace the new reality and to ask, what are the ways in which I must and can change my model? And accepting that challenge is usually the hardest part for incumbents, and one of the major reasons why incumbents are disrupted. So I think that's the first lesson from history that we should think about in the context of this crisis. The most immediate change to the way we think and do business is the disruption to proximity. So if your business model is predicated on proximity, then you need a new plan A. And that means that if you're a university, if you're a restaurant, if you're a cinema, and indeed, very large parts of our service economy will need to rethink how they do what they do. This doesn't mean that people won't go to classrooms and to restaurants anymore. It means that their expectations for how these services will be delivered will change. So for instance, the main case study classrooms in the Oxford Blavatnik School of Government, where I teach, has about 120 seats. But for the next year at least, we can realistically only have 60 people in the room, so half as many as we normally would. That's a profound disruption. Now, we are a not-for-profit, and so we're substantially more resilient to these changes. But imagine if you were a small restaurant. Imagine the calculus if you can only have half of your customers that you normally would. Well, you better have a very robust alternative strategy. For instance, have a very, very robust takeaway business. Otherwise, you're not going to survive. You're not going to survive this crisis. And so this idea that you need a new plan A is really important. I see we've dropped Pratham from the call. I'm assuming that the rest of you on the call can still hear me.
I'm here. I'm here,
okay.
Professor. I've just muted myself. Yeah, just so that we can hear you.
Great. Yeah. Okay. So good to know. Okay, so the second big change, so the first big change is really this issue of disruption to proximity. I think the second big change is really going to be a capital and supply chain change, where we're thinking about greater resilience, both in terms of capital as well in terms of supply chains. Companies are going to require that resilience effectively on both sides of their balance sheets if they want to survive the next big disaster like COVID. And I'll come back to this point about resilience in both capital and supply chain later. But I just wanted to flag this, that resilience has to be a central part of how you think about your strategy going forward. But before I do that, let me address some other big things that were already happening in the world pre-COVID. And I think there were 5 big trends that were happening in the world already at that point. The first was climate change. The second were demographic shifts, particularly the Western world and the Northern world is getting older, and the Eastern world and the Southern world is getting younger, and more of the population is shifting to that part of the world. More of economic activity is shifting to your part of the world relative to the part of the world where I am. So that demographic shift is another big change that was already happening. Deglobalization, at least since 2016, but perhaps since 2010, we've been witnessing increasing deglobalization, particularly in the West, rising inequality, and the rising use of AI and digital in every element of our life. So if you look at these 5 big trends, 2 of them are just going to continue as they were before: climate change and demographic shifts. Nothing about COVID is going to change climate change in the long run. Certainly in the short run, there might be some improvements to air pollution and so forth. But climate change and demographic shifts will continue. But these other 3 changes, deglobalization, rising inequality, and the use of AI and computing technology, these are actually going to be accelerated as a result of COVID. So let's take these 3 in turn. If you think about the rising supply chain risk that COVID has effectively uncovered, this is going to accelerate the pace of deglobalization and force a realignment of supply chain into more politically stable relationships. In the intermediate term, this could be good news for a country like India because it is better aligned politically with the United States than China has been historically. So in the intermediate term, that could be good news for a country like India. But in the broader spectrum of things, it's not necessarily good news for world peace, because it can lower the incentives to avoid war. One of the big things that has prevented a major conflict in the last 20, 25 years, particularly between the 2 most powerful countries in the world today, the US and China, is that they've been so dependent on each other economically. And neither country has wanted to accelerate or to exacerbate conditions that might result in an armed conflict. But if we see increasing deglobalization from this particular crisis, particularly vis-a-vis China and the United States, then we risk an increased probability of a major armed conflict in the world. And this is, of course, good news for nobody. If we look at inequality, well, you know, we may all be in the same boat when it comes to COVID, but it's very clear that some of us are in first class with very easy access to lifeboats, while many others are languishing deep below deck. And what this crisis will do is exacerbate that inequality that has been a central theme in the public conversation for the last 10 years. And it will raise the decibels on outrage over inequality, particularly in rich societies where there's much less hope for economic activity in the long run. And already people like Thomas Piketty, the author of the famous book Capital in the 21st Century, are saying this crisis is an opportunity to, structurally reform and reimagine capitalism, and perhaps even to eliminate capitalism in some societies. So for those of you who are aspiring to careers in business, this is something you've got to keep your eye out on, and I'll return to this theme as well. The third sort of structural issue that is probably going to be exacerbated by this crisis is the use of AI and digital in public life. So just 3 months ago, I was at a meeting where we were discussing how 5G technology, the 5G mobile technology, could potentially revolutionize medicine through telesurgeries. And a doctor who was present at that conference refused to acknowledge that and said that patients would never be comfortable with the idea of telesurgery. Well, within the last 8 weeks, we've all become so radically more comfortable with IT, with technology. And we will become radically more comfortable with AI and the use of that kind of technology in our public lives. This is a sea change in attitudes. And its impact, together with the impact of 5G, which is just around the corner, cannot be ignored. There are 3 things in particular about 5G that are very promising. The first, of course, is very high speeds, which we're all very much looking forward to, in the sense of you can download a movie which would currently take 8 minutes within a few seconds on a 5G connection. But it's not just about speed, it's about latency, very high latency, which means that effectively you can get very high frequency of communications between 2 devices. And that's the sort of thing that will enable remote surgery and technologies like that. And then, of course, you can have multiple devices connected to the internet at the same time. So all of these things are part of the promise of 5G. If you just think about, businesses like Uber or Ola that you couldn't even imagine before a world of 4G. Now, imagine all of the new businesses that will be created by 5G when we introduce this world of radical high speeds, radical high latency, as well as multiple devices being connected to the internet at the same time. So if there's one piece of advice or promise from this crisis to a young entrepreneur, it's not to ignore the 5G opportunities. A whole new generation of millionaires and billionaires will be created by 5G. So that's an area where you want to spend a lot of time if you're starting up in the technology field. But let me return to the theme of resilience that we talked about earlier, we touched on earlier, and how businesses need to be more resilient in both their capital and their operating structure. So the COVID crisis was an uncertain event. It was an uncertain event in that we didn't know when it would happen or how severe it would be, in the sense that there isn't a well-defined probability distribution function for an event like COVID. But it was not an unpredictable event. This is to say that even in, say, December 2019, no one should have been astonished at the idea that we would be, or we could be facing a catastrophic pandemic. In fact, Hollywood had been making movies about these sorts of things for decades. So COVID is what we would call a known unknown. And the point here is that you need to plan for events like this. You need to be resilient in your strategy, in your operations, and in your capital structure for such events. As a business, if you're carrying a lot of fat during this crisis, then the chances that you will survive are very low. But you cannot, at the same time, be so lean as to have no reserves at all. So in good times, you need to be making the investments in people, in relationships, in capabilities for a crisis like this. If you find that you're making these investments now, in the middle of the crisis, then it's already too late. And the chances that you will survive the crisis are much lower as a business. So you plan for these sorts of risks by investing in processes, but above all, you plan for the kind of unknowns that COVID represents by investing in people with very good judgment. So people whom you can trust to have the right instinct when the right answers are unclear, as is the case right now. So you need to be able to look around your team and say, who are those people? Who are those people with a good judgment who will help our company, that will help our team navigate the next big crisis like COVID? If you don't immediately know who those people are, then you already have a very serious problem. So this is the point about resilience, that the next COVID-like crisis will come. We don't know whether it'll come next year or whether it'll come in 10 years, but you have to be prepared for it. The other issue that we should probably explore a little further is this point about inequality and the outrage that it precipitates or has precipitated thereof. Because perceptions of structural inequality in the economic system are effectively the biggest existential threat to capitalism today. The latent existential question for every business is, what is my strategy for dealing with outrage? Now, I'm personally planning to write a book on this subject just because it's been exacerbated by this COVID issue. So I could spend a lot of time on this, but let me just say three things. The first is that the role of business in society is to create long-term value for customers, for employees, and for shareholders. Business is not social service. Business is creating profit in exchange for value creation. So if you're a business, don't overdo your response to this outrage. Don't overdo your response and become an NGO. Because if you do, you will fail and nobody will shed a tear for you. But also don't ignore the problem. If your business model does not create value for customers and employees, then you're very unlikely to survive this outrage. And two cases in point are Amazon and Uber right now that create tremendous value for customers, but there are some great suspicions that they're not creating much value for their employees. And this is probably their Achilles heel. This is the biggest risk to these businesses. Amazon today might seem completely invincible in that it has become more powerful today in a world with COVID than it was before COVID. But at the end of the day, there is a structural and existential risk to its business model because people perceive that it exploits its employees. Unless Amazon is able to address that perception, it will find that it can be very easily disrupted, either by governments or by a new business model. The second point here on this point of this issue of acting on outrage is to act on your asymmetric capabilities. And what I mean by that is to act when you have the direct capability to relieve immediate harms in society. We're living in a world right now where we see a lot of these immediate harms. And if you have the capacity to relieve those harms, then do so. Because if you do well for people when they are down, they will always remember you fondly. And that will do more wonders for your brand than any amount you can spend on marketing. So there's a real opportunity here for businesses to act on their asymmetric capabilities. The third point, of course, is to watch for the shifting public expectations. So when you do good for others in a moment like this, they will expect more from you. You know, the point about no good deed goes unpunished. So if you have a plan for how you manage these shifting expectations, know that plan before you act, so that when you act, you're not suddenly caught with people expecting you to do more and more until, of course, you bankrupt yourself. The final issue that I want to address before I think we should just open this up for a conversation and questions is this point about government bailouts. we are living in a world with lots of government bailouts right now. And this is every major government in the world currently is engaging in massive bailouts for both businesses and individuals in this crisis. And this is deeply connected to this issue about inequality. Of course, some of these bailouts are necessary, and without them, we will be plunged into a Great Depression, which can precipitate a world war or even worse. But the bailouts are not free. They're an intergenerational wealth transfer. So tomorrow's taxpayers are paying for today's bailouts. So what we want to avoid with these bailouts is a situation of what we call heads I win, tails you lose, which is to say that the bailouts are often misused to socialize the risk so that businesses benefit from the upside, but they don't bear the cost of the downside. If this is how the bailouts are structured in this crisis, then the outrage will only grow and capitalism will become more illegitimate. And countries like India will find themselves thrown back to the dark days of socialism. So with this in mind, we should be very careful about this moment. And I would propose two simple rules. The first is that government bailouts should come as non-voting equity, not as debt. The Indian government's plan, which was announced yesterday, is effectively to make free debt available to companies. This is a terrible idea because the government will then absorb the cost of failure. But if things succeed, then the taxpayer will get no benefit. We must restructure the bailouts as non-voting equity. And I say non-voting equity so that the governments don't get in the business of interfering with how businesses are run, but that they do get a share in the upside. And this is not all rocket science, by the way. We did this in 2009 in the US with the financial crisis. And the US government even made a small profit on its bailouts. So there is a precedent to doing this, and I'm worried that India is approaching the bailouts in the wrong way right now. The second is we want executives, business executives, to have more skin in the game, to avoid gambling with the public's money, with taxpayer money. So what I'm suggesting is more clawbacks for executive bonuses if it is found that they were deliberately reckless with capital risks. I mean, there's a lot more detail here to these proposals, but in the interest of time, I'll spare you those details. But on a side note, I will say that I'm trying to create an independent oversight commission on COVID business assistance to help prevent the Indian government from reliving the mistakes of other governments in this moment. Many business interests will be opposed to this idea of equity-based bailouts because, of course, if somebody's giving you free money, you'd want to take it. But all of you on this call, you are the taxpayer that will pay this bill. So if you have any influence with the government, then ensure that they create an independent oversight commission. You can have them reach out to me at my Oxford email address, and I'll be happy to help. Look, the last thing I'll say is that this is a moment of great opportunity. Crisis breeds opportunity. Uncertainty allows particularly new players to emerge and to build new realities in ways that we've just never imagined. And this is where I think the combination of this crisis, the socialization of IT, and the promise of 5G is just really a brilliant way in which things can come together for a new future. But it's also a time of great upheaval, and many longstanding incumbents will fail, and many people will try to structure the rules in ways that try to keep the benefits for themselves. So in a time of crisis like this, we can either get things profoundly right or we can get them profoundly wrong. It's going to come down to your resilience, your nimbleness, your good judgment, and of course, a fair bit of good luck as well. So let me stop there, and then we can take some questions or have a conversation. Over to you, Pratham.
Awesome. Thank you. There's many notes, and I have lots of questions as well. And also, the audience has been, posting questions. So I'll take a few from the audience, and I'll take a few that we had, prepared beforehand. So I think one question that's on everyone's head, and that I can see in the audience questions as well, is coming up, is where should we now invest, right? Our money, our time, our futures. Of course, there are certain industries that seem completely ridiculous to invest in now. Travel, hotel. So where do we now take that money or take that time that you're going to invest in those industries? Yes, pharmaceuticals, yes, 5G, but everyone's flocking towards those industries. So where is the gap What are the gaps that we can come in and fulfill?
Yeah. So this is a great question. So look, firstly, if you're making investments both in terms as an individual as well as in terms as an organization or an institution, any sound advice is always to invest for the long run rather than to invest for the short run. This is not to say that there aren't people that are in the business of market timing and trading on short run arbitrage opportunities, but that's mostly luck. And in fact, there's a whole stream of literature and academic finance that those who engage in market timing rarely do better than luck than you would if you were rolling a dice. So any advice in this space is usually best given from a long-term perspective. The second thing that one has to say whenever one gives this sort of advice is to say that this does not constitute any sort of legal investment advice, and so obviously you have to act on the basis of your own judgment and so forth. So when you're looking at this from a long-term perspective, what you're looking for is good value, right? Right now, there are a number of businesses that will bounce back. We're not going to see a total elimination of travel. We're not going to see a total elimination of the use of hotels, a total elimination of the use of air transport and so forth. But what we are going to see is some radical shakeup in those industries where some people will be more resilient, where some people will be more nimble, where they will be able to repurpose their business model in a way that allows them to respond to the new reality. And in fact, as you do a careful analysis of those industries, and you say, okay, you identify who are the players in those industries who are both substantially discounted right now, as well as have the capacity and the good judgment to repurpose themselves in the future. Those are the places where you've got the best deals. You're right that right now a place like Amazon is highly expensive to buy because everybody's flocking to Amazon. So this is to say that don't ignore the value that's in the core businesses that everybody's flocked away from, because there's a lot of cross-sectional variation there. Within the tourism industry, there are going to be some players that will fail and some players that will succeed. So don't ignore that as well. Same thing with, say, higher ed, right? So, of course, you don't invest in higher education in a commercial or financial sense, but you certainly do invest in it from a human capital sense. And there are going to be some universities that will fail, and there are going to be some universities, hopefully like Masters Union, that will survive, that will thrive, right? So if you're trying to make a bet as an individual on higher education, you want to make a bet on those organizations that are going to have the nimbleness and the good judgment to survive, to be able to adapt and change as a result of this crisis. If you see a university that's saying, I'm not going to change anything about what I did, then you know that that's probably not a place where you want to go, right? That's the sense in which I think you're looking for value, whether you're looking for personal investment in your own human capital or whether you're looking for financial investment.
Fair enough. And so if we extend this to countries, there is this thing going on about companies moving away from China and all the countries trying to sort of rush in and make and leverage that exodus. First of all, is that really happening, or is that a media creation? And number two, as most of our audience is from India, can India really expect to attract those companies away from China, or is that a fool's dream?
So look, some of it is, where there's smoke, there's fire, right? So some of it is actually quite real in the sense of the supply chain risk associated with China has become more real over the course of this crisis. And there is a sense that the Chinese government did not behave appropriately in the sense that it sat on very critical information early in the crisis, and through its silence might have misled other governments in the world economy on the depth and severity of this crisis. And they say, fool me once, shame on you, fool me twice, shame on me, right? So if we've learned this lesson once, then we need to be resilient and prepared for it next time. If there's a second crisis in 3 years and we find that the same thing has happened, then the fault will be ours, not not China's. So it is certainly prudent for countries and companies to think about plans B now in this moment. That said, of course, the shift away from China is not going to be as dramatic as people are suggesting, and it's not going to be as rapid as people are suggesting. I know the Indian government is trying to capitalize on this moment, and it is putting forward a lot of a lot of available real estate for companies that are looking to relocate manufacturing. I think that's an important first step, but the biggest barrier to businesses locating in India right now, multinational businesses, particularly in industries like manufacturing that are capital intensive, is the threat of legal expropriation, right? So almost creating special economic zones where you've got fast track courts and things like that are going to be just as important as providing real estate. And of course, the third thing is real estate isn't the only infrastructure that's lacking. Power and water resources are also important issues. High-speed telecommunication is going to be important. Ports and transportation infrastructure. If India wants to be a manufacturing hub, it needs to have very high caliber ports. Right now, the country lacks those kind of high caliber ports, with one or two notable exceptions. So if the country is serious about it, this is a moment of opportunity to seize on, but it's not going to be as simple as just real estate. It's going to be about creating a whole ecosystem in the way that, quite frankly, China did so very, very well, starting in the 1980s onwards.
Right. Professor, can you hear me?
Yes, I can hear you.
Yeah, awesome. Yeah, no, that makes sense. And so just extending from that now, since the audience is again mostly students, given the new industries that you recommended, given the prospective shift of power that's happening from the US to China to India, etc., what should the students be doing right now? How should they be planning their futures? What are the yardsticks they should be referring to when they plan their future education, their future investments in themselves? Is it a good time to invest in education? What kind of reskilling should the students be undertaking right now? So what would you say to the students at large?
Yeah, that's a great question. So I'll say what I say to my own students here at Oxford, and I usually give them 3 bits of advice, right? The first is don't suck at anything important. So if you want to be, for instance, in business, you can't be in business and not know how to read a balance sheet or something like that, right? So there are some basic skills that you need to have. And if you know that you've got some critical weaknesses in your skill set, then in your basic skill set, then now's the time to fill those gaps in basics. You're never going to be able to, have the kind of transformational success you want if you have critical gaps in basics. So that's like basic stuff, number 1. Number 2 is strive to be excellent at something. So build depth in something. And this is to say that, if you're just skimming the surface on a number of different things, it's very hard to see how you'll be able to build a sustained competitive advantage. Drew Houston, who's the founder of Dropbox, is a great way in which he puts this. He says, excellence is the sum of 1,000 small details, right? And so it's the kind of people who invest in those details, who get to become really good at something. Those are the people who generally do really well. And then the third thing is to build your capacity for good judgment. And what we mean by good judgment is it's, look, the way we make decisions, we like to think we're all rational, particularly people in business. But there's so much research coming out of behavioral science that says that actually when we're faced with an uncertain situation, we tend to make the decision first based on our instinct. And then we rationalize it and we say, oh, this is why this is a good decision. That's how, we are evolutionarily conduced to respond. So on one hand, that might seem like really bad news. It might seem like, oh my God, there's nothing I could do because I'm going to make an instinctive decision and then rationalize it ex post. But the good news is that instinctive decision that you will first make is something that you can train yourself to have better instincts. And that's what we call education for judgment. It is, how do I build a capacity to make those right decisions when I am faced with uncertainty? And I'll tell you a quick story on this. So, when the SEAL Team 6, this is the Special Forces in the United States, when they had identified that there was this house where, someone who most likely Osama bin Laden was staying, and that they had to make this nighttime raid and so forth. They only had an image of the house from the outside, right? They couldn't see inside. And they were going to make a nighttime raid on this place. So they didn't know what to expect when they were going to go inside. So in their training facility somewhere in the center of the United States, they built an exact scale replica of the building from the outside, right? But they didn't know what it was going to look like on the inside. So every time they did a training routine, the people who were training the SEAL team, they changed the inside, right? Why did they do that? They did that not because they thought, oh, once we'll get the right inside design. It's that they were training the team to be prepared to deal with any kind of uncertainty. That's the kind of education for judgment we're talking about, right? It is, how do you respond to a situation no matter what that situation is? So that's what we mean by education for judgment. That's the third thing. So I'd say it's all those three things.
Got it. Understood.
Excellent at something, and education for judgment.
Understood. And I mean, I didn't plan this question, but do you think our educationists are doing a good job of that right now, at least in India?
I think that, what universities traditionally are very good at is the analytical stuff, right? It's the stuff that can be quantified easily. It's the stuff that can be conceptualized easily. And in some sense, that's the stuff that academics like to do as well. And that's important. Look, this is not to say that that's not important. That's one of the points that the 3 points we talk about. But it's not the only thing, right? The stuff that most universities are uncomfortable with is the stuff around judgment. Very few places actually invest in building judgment. And if you look at an event like COVID, we said earlier, right, there isn't a probability distribution function that will capture an event like COVID. So it's not a risk event in which you can build an actuarial model and in which you can use, elements of integral calculus to sort of predict and manage. No, it's the kind of event that it's going to happen, but you have no idea of what's the probability, what's the magnitude, etc. So you need to be able to respond to that dynamically. That's why I said in those moments, what matters is the right people rather than the right models, right? It's like when the financial crisis hit in 2008 and, some of the bankers' response was, oh, this is a Sig Sigma event, in the sense that this is an event that's so far out of the probability distribution that, well, there is no such thing. If an event is that far out of the probability distribution, it suggests that you have the wrong probability distribution. You have the wrong model. So it's not that the event is, something that is outside of the realm of your risk model. It's that your risk model itself is incorrect. And that's where you need people with a capacity for judgment rather than simply analytical models. So this is not to say that the analytical stuff isn't important. I mean, after all, I went to MIT. So for me, that kind of analytical mathematics is really important, but that it's not everything. Judgment is probably just as important.
Sure. Understood. I think that makes a lot of sense. Extending from that, Professor, in India, the Indian economy rests on, family businesses. And a lot of the people in the audience would also be coming from that family business background. And, family businesses are not as well supported by a professional banking structure as they are perhaps in the US or maybe even in China, right? So in a way, family businesses are sort of on their own at this point, right? And they're seeing a lot of bankruptcies, etc. The credit availability is scarce at best. So, when you're not in the formal economy, where you're in this, secondary economy or cash economy for that matter, as a family business, what would be your advice to the government and to the family business as to how can they sustain this crisis?
Yeah. So two things. I think the advantage that family businesses have over a traditional listed company and then on a stock exchange is that it has what we call patient capital, right? You've got relational capital, and so that relational capital gives you, in some sense, the flexibility and the capacity to make long-term investments. So that's actually a big strength. Many listed companies don't have that because they're accountable quarter to quarter to shareholders and to other capital market intermediaries, analysts, and so forth. So there is that advantage. I think that where family businesses often go wrong on this issue is that they don't recognize the importance of meritocracy in making decisions, right? So the one family business that has been very well cataloged and has done exceptionally well over the course of about 350 years is the Rothschild banking family, right? And what do they have that is really distinctive? So they have the advantage of being a family business, which allows them to have that patient reputational capital that extends from generation to generation. But every generation, the business basically decides who is the member of the family that is most capable. And that's the person we're going to put in charge. I don't care if they're the son or the daughter of the previous head. It doesn't matter. It's that we have to make a decision based on merit. And if there's nobody in this generation who has that merit advantage, we'll bring an outsider in. So it doesn't matter, right? So it's the commitment to both of those things, merit and patient capital, that can help family businesses succeed, help them thrive. There's a different probably issue with smaller scale. So this would apply to say businesses that are above maybe 100 crores in Indian rupee turnover. But if you're looking at a smaller scale, then obviously then this is the problem that many small scale businesses will face, regardless of whether they're family businesses or not. Businesses in the informal economy will face. But again, I think that this could be an opportunity for the government actually to transform that economy into a formal economy. So that whole sector of the economy is going to require a lot of support in the moment of this crisis. But one of the things that could be contingent to that support is digital currency. So if digital currency becomes endemic to the way that whole sector of the economy does business, then you onboard them into the formal economy, right? So just like countries like Kenya effectively, bypassed the whole idea of branch banking and they went straight to mobile banking. There is an opportunity to countries like India, which have a large informal sector of the economy, to actually now make that leap into formal economy. And the government can be a key part of driving that. We already have the infrastructure in a country like India, thanks to things like Aadhaar, to do that. But so it's going to require some bold and some pretty hard decisions, at least in the short run, on part of government if they want to make that transformation. But this is a government that just won an election and has a strong majority. So if it wants to make bold decisions, it should be able to. If there were an election next year, then of course it'd be a different matter.
Right. This is a question that's come up many times, and you'll have to wear your professor's shoes on this one. So if you had to assign a grade to all the countries, to the major countries, as to how they have responded, both from a disaster management point of view and also from an economic management point of view. So 2 grades you have to give to the US, UK, China, India, and Germany.
Yeah. And what were the 2 grades?
So first on disaster management, whether it's an A plus, B minus, or in economic management.
Okay. So actually, I don't think we should give 2 grades. I think we should give 1 grade, because at the end of the day, the government needs to balance both of those things. And in fact, I just wrote an op-ed on this issue for the UK audience, which is that you can't look at these as silos. You can't look at this as the disaster management silo or the healthcare silo, and then the economic silo, and then, the mental health silo, and so forth. In fact, the job of the prime minister is to balance all of those things. The reason they're prime minister is that they need to have the judgment to be able to look across those silos and actually offer one common theme or one common policy that integrates across all of those risks. So if you look at that, then I think that in those 5 countries that you listed, the country that has probably managed this the best, and this is not to say that it could not improve on that, is Germany. I'd say that the great strength of Germany in this is that it shut down early. And in fact, some of the research done by my colleagues here at the Blavatnik School at Oxford has suggested that countries that shut down early, including India for that matter, have actually had a much bigger advantage in managing the virus than countries that shut down, maybe even 2 or 3 weeks later. So the UK and the US are both countries that shut down a little too late relative to when they should have. And that's had a profound cost in terms of death rates, in terms of economic implications and so forth. So Germany has managed that balance in terms of shutting down early, in terms of restarting and restarting in a phased and pragmatic manner, and in terms of sort of balancing the considerations of economic activity and its very strong manufacturing and export-driven economic activity with the public health considerations and with the mental health considerations. So if there's a country that would get, say, an A- overall, it would be Germany. I'd say that, when it came to the other countries, India did well in that it shut down the economy early on, and it shut down on transport early on. But it didn't back that up with a kind of, right now we're seeing a lot of fiscal response from the Indian government, and we're seeing a lot of energetic stimulus response from the Indian government. But it didn't back that up as soon as it needed to. And the big issue that India missed the boat on was what to do with casual migrant day labor, which is a huge part of the Indian economy. So I'd say that if we were just evaluating it on the public health response, it would have gotten a higher grade. But given that it had to actually manage across many different factors, it probably overweighted the public health over the other factors. And that grade would probably come down currently to probably a B+. I'd say that, countries like China and the US have probably got the worst grades for different reasons. I'd say that there are states in the US that have actually done very well. Massachusetts, which is my home state, California, and New York are 3 states that have managed this very well. But the federal government is what we're talking about. And the big problem, of course, with the federal government is that it did not have a coordinated and consistent messaging. So it created a lot of confusion. And messaging is really important in a crisis like this. People need to hear a consistent, coordinated message from the very top that reassures them. In the same way that the Queen here in the UK went on national television and simply reassured people. And she said, look, I lived through World War II. That was a horrible time. I know we pulled together through that. We'll pull together through this. It's the people want to hear that kind of reassuring messaging in a crisis like this. Your prime minister has done a reasonable job in that, but the president of the United States has not. And the same messaging is the reason why I would give China a really bad grade, which is that, China, the focus was too much on the messaging and too little on the actual response. So the main thing the Chinese government seems to be concerned about is protecting itself rather than anything else. And that's a horrible way to manage any crisis. So they've lied to their own people. They've lied to the international community. And that's just, it's inexcusable because you think about all the deaths and you think about the disruption to economic activity.
Right. Makes sense. So I think we have some Forex traders in the audience, and so this is the question about the dollar. Would you buy dollars or would you sell dollars?
So again, all this investment advice that I'm giving you it has no legal standing. But look, if you're looking for stability in a moment of crisis, there's no better stability anywhere in the world than the US dollar, right? That is because the US dollar is backed up by the US economy, and the US economy is disproportionately the largest, most powerful economy in the world. So yes, then if you were looking for short-term stability, you would rally to the dollar. that said, I mean, I want to go back to what I said earlier, which is that you want to think about this from a long-term perspective. Now, if you're a Forex day trader, you don't care about long-term. You care about making a profit in the next hour. But if you're investing for a generation, then, the countries that I would go long on China, I would go long on India, I would go long on, countries which have high investments in human capital, like Israel, like the United Kingdom, and of course, places like the US, etc. Because in the long run, you want to invest in countries and regions that have robust institutions, that have large markets, and that have investments and traditions of investments in human capital. Those are the places where you really want to put your bet. So these are the sorts of places I would invest.
Got it. And so I guess like, let's talk about this question in a more softer sense, which is like not about trading per se, but about just how much China had 80,000. India today, I think, will cross a total number of cases. We'll have more cases than China today, right? And so something that China did worked well for them. And so how will that impact their currency, right? And are we seeing sort of the dual power order return, for the first time after the fall of the Berlin Wall?
Right. So look, firstly, I don't believe any of the numbers coming out of China. Okay, so the Chinese government has shown that it has managed these numbers over the course of the last 4 months. And so when someone says, oh, the debt rate in this country is greater than that of China, well, that tells me something of the debt rate in country X, but it doesn't tell me anything about the debt rate in China, because we can't be reasonably relying on those numbers. So that's point number one. That is not to say that the Chinese government hasn't managed this quite well. They did actually make the decision to shut off Wuhan fairly early on, but actually quite much later than they should have. And they did contain the crisis reasonably well within China. So this is not to take away credit from what they've done, but to say that they have had a record of lying publicly on the numbers. And so it's very hard to take that seriously. So with that caveat in mind, look, at the end of the day, it's hard not to go long on China, because China is going to be the world's largest market. It is going to be effectively, and in many industries and sectors, it's already the world's largest market. It's going to be the world's largest economy. I think the big problem that China has is, particularly from a foreign investor perspective, is expropriation risk. It's actually a problem even for people within China, which is that, the state is unpredictable and the rule of law is highly contingent on your relationships with the people in power. For that matter, there have been times in Indian history where India has been like that as well. In fact, one of the reasons why I said earlier that if you're going to build a manufacturing hub in India, then you have to provide assurance of the rule of law, because the Indian courts are A, notoriously backlogged, and B, they can be quite fickle. Sometimes they can be populist, sometimes they can be swayed in other ways. So, my sense is that with both of these countries, India and China, it's that from a Forex perspective, foreign investment perspective, it's that expropriation risk that's pretty substantial, but much bigger, quite frankly, in China than in India.
Got it. That makes sense. Professor, one last question, and is there a question that you'd like to answer? Is there anything that I haven't asked that you believe is important to be addressed today? We just touched the surface of many things, but is there anything that you'd like to go deeper in, and for the sake of the audience?
Yeah, no, I think I'll come back to something that I hope was implicit, if not explicit, in a lot of what I said, which is that particularly for this audience, which I understand is between 20 and 30 years of age, you're making investments for the rest of your life, right? You're making generational investments for your careers. And so try not to think of this as a short-term problem, but try think of this as a long-term opportunity. And everything you do should be geared around that kind of long-term opportunity. Of course, you need to have short-term resilience, which is what we spoke about earlier, which is if you're a business, it means you need to have enough liquidity to make your payroll for the next quarter. But it's that when you're thinking about strategy, when you're thinking about how it is you make investments, both in terms of financial sense, but in terms of your own careers, think about it from a long-term generational perspective. What are the investments that I can make in myself and in others that will have the slowest depreciation, right? Those are the sorts of things you want to do. Relationships are really, really important at this stage in your life. The relationships you build, if you're 20 years old, the relationships you build in the next 10 years, these are going to be the relationships that will make or break your career over the course of the next 30, 40 years. Because, it is that investment in trust. If people trust you, they will do all kinds of things for you. They will innovate for you. They will support you when you are down. But if people don't trust you, then there's very little you can do. There's very little flexibility you will have. And so this is a time in your lives and your careers where you invest in building that trust. And there is a perception in the foreign business community when it comes to India that you've got to be very careful about doing business in India because people are going to cheat you and so forth. And people say, oh, don't do business in India because, you can never trust the. And so, if you can develop a reputation to overcome that perspective, if you can build a reputation where you are unquestionably a person of your word, and the one business group, quite frankly, that across the world has that reputation, whether it's fair or not is a different matter, is the Tata Group. Internationally, it does have a very high reputation for trust. But, what would it take to build a reputation like that for you as a young entrepreneur starting off? Those are Narayan Murthy did that with his business, Infosys. Those are the sorts of questions that you may want to consider as you're making these long-term investments. It is easy to make a quick buck in the moment, but in the long run, that's not worth it.
Yeah. Awesome, Professor. This has been really exciting for me personally, because you're sitting at home, all you think about is, what's going to happen next. So I think, the perspectives have been really helpful. I hope it was helpful for the students as well. Professor, thank you once again, for your time. I know it must be middle of the day. I mean, must be around noon, I guess.
Yes, that's right.
But, right. And so I hope you have a great day ahead. And hopefully every day is fewer cases than yesterday.
Yes.
That's the thought I want to leave everybody with. But thank you once again, Professor. Really, really appreciate the time. And thanks everyone for coming in. We'll be posting a link to the recorded video as well. So in case any of the questions got missed, you can refer back to the video as well. Thank you, everyone. Thank you, Professor.
Absolutely. All the best to all of you.